All right. Okay. So T-Mac gave us the thumbs up. So sorry about that. Running a live show, there's always a little bit of hiccups in the show. Welcome to another Closing Bell. Thanks for everyone tuning in. Andrew is not joining us today, which, as I said, I'm a little glad that Andrew is not joining us because we have a special guest in the office, in the Vancouver office, Mr. Pezim. Welcome. Looking good.
Thank you. Hey, everybody. I hope everyone's having a good day. It's a bit of a surprising day. Had a market sell-off at the morning, and then things just turned around, and we've been on a tear higher.
Yeah, definitely. Brian is here today in the show to share some really, really special news, which is, of course, I'm really excited for that as well. Let's go through our agenda really quickly. Today, we're going to discuss the job reports, the quantitative tightening, its impact on the market. We know quantitative tightening started yesterday, so from June, actually, today is June 1st. Today is June 2nd, so it started yesterday, yeah. We're going to talk about Microsoft and why it cost its forecast. We're going to talk about some earnings, tons of cool stuff to talk about, and a little major announcement from Brian, which I'm really excited as well. Brian's audio is very faint. Yeah, well, we're okay. Fixing that.
I think it should be fixed now. Just give us a thumbs up if that's okay now.
Yeah, perfect.
Okay.
So, Brian, let's get to you. You traded. What did you trade this morning? This is how I usually like to start the show, like with your morning trade. How was it?
It was, it was so long ago.
That's true.
I traded. God, now I'm blanking on what I traded. It was right from the open. It was a Rising Devil trade. Someone going to help me out.
Was it AI? Did you trade it AI?
No, it wasn't AI. Actually, I was going to watch AI because I know you had it.
I had a short on it.
Yeah, you had a short on it, but it wasn't AI. God, I'm just blanking on it completely. I know I traded Microsoft when it started to turn around with Andrew, but what was it? It was.
Sorry to put you on the spot, man.
I know. It's just like I said. I'm blanking on it. So.
Chewy. Someone in the chat said it was
maybe
Chewy.
It was Chewy. Yeah. Actually, it was Chewy. Chewy was interesting. Chewy was a trade I call a lead balloon trade.
Mm-hmm. Up 21%. Holy.
Yeah, but it's up right now. But it was trading higher, a lot higher, and my trade book that I call my lead balloon trade. You don't see very often.
Yeah.
It's a gap up trade, but what happens during the pre-market is the stock price falls below the VWAP. So right. I look for that as a possible short because it's trading below the VWAP and not above the VWAP. So looking for some weakness, and it did sort of. It did exhibit some weakness going into the open, and that's another thing I look for with all of my opening trades. So looking for a move in the direction that I'm expecting it to go. So yeah, I took it short at the open and had a nice drop on it. And then I actually played it to the long side because it did turn around. But Chewy reported last night, and I think they had reported better numbers than the street was expecting. So.
I have no idea. What Chewy even do? I don't even know what they do.
Chewy, I think, is they're a pet food company.
Pet food company?
Yeah, and I think they're one of these companies that sprung up, and did fairly well during the pandemic. They do. I think just pet foods, pet supplies, toys, that kind of stuff, and they provide a delivery service. So unlike your regular pet food stores where you go and you go and buy your pet some food, they'll deliver it to your door, and that obviously was the attraction during the pandemic. Nobody wanted to go out, nobody wanted to go to stores, so. Yeah. Anyway, they were expecting, the street was expecting a loss, and I think, don't quote me on this, but I thought I heard they put in a 2 cent, they made a 2 cent profit. So again, well above what the street was expecting. So yeah. That's why it gapped up so much.
2 cents, I'll take it. 2 cents.
Well, all these companies that are out there that aren't making money.
Yeah.
Andrew talked about them this morning in his daily blast newsletter. He talked about zombie companies and how a lot of these companies just are out there and they're just not making money. So how long can you have a company maintain a company when it's not making money.
Not long.
No,
Not
eventually,
long.
yeah, eventually you're going to run out of the investors that have put money in are going to run out of patience or run out of money. One of the two.
Especially as cost of borrowing goes up, so then we know interest rate is going up. Last month, I think Peloton raised about $700 million debt. Guess the interest rate on that, Brian?
No, I didn't hear.
12.5%.
Ouch.
So whatever so far was plus another, I think 7.5% variable because of the credit risk. So 12.5%. That's like a credit card debt. It's really high.
That's crazy.
I want to talk a little bit about my trade this morning because even intraday, it's a really good opportunity. So what happened was I had a short on C3 AI. This was solely based on fundamental, overvalued company. I had about 1,100 shares short, I think. And then once the stock gapped down after the earning, I covered. But this is something interesting that happens intraday. Is when you see these stock gap down, and in the option market there is no options for it, they usually push back higher. So you can see AI, even though with terrible earnings, kind of rallied all day. And I think the reason for that is because there is no options to the downside, and Jared plays this a lot as well, is market makers need to push up the price to be able to hedge their downside, to be able to provide puts at $15, $12, $13. So that was quite interesting as well, like very bad earning, gap down 25%, but pretty much rallied all day. So that was quite interesting as well. I wanted to talk to.
I can't. I'm not used to Andrew's platform, which is what I'm working on right now. I'd actually like to see what that looked like on a 2-minute chart at the open. Was it was it trading above, or was it gapping down and trading above the VWAP, or I think it was trading sort of flat, wasn't it?
Yeah. So it right at the open. So this is right at the open here. Let me add extended hours here as well. Shout out to our programmers who made this amazing tool for us. But I can add VWAP as an indicator as well. But first few minutes, a little bit of chop.
Yeah.
And then it just started.
But it kind of settled into a range. I looked at it for a couple of times and I thought, it's not really tradable.
Yeah.
But then, yeah, you're right. You really after sort of, actually that's a beautiful pennant if you look at that formation.
Yeah, definitely. I can only imagine a lot of people maybe set some shorts here. You've seen this candlestick and they got burnt. But then after that, a couple of strong candlestick volume came in and then it just rallied all the way. Good opportunity. I know some of our traders have traded them. So Brian is a guest today. He's using Andrew's computer, so not as familiar. But someone, Brian, in the chat is asking any swing trade idea going into market close.
Wow, I've been looking through here, and actually I looked at things just before I left the house. And if you caught my swing trade video last night, I flagged some levels of resistance on the various indexes. And if I'm not correct, IWM I flagged 188 as being resistance, and we're literally at 188.24 right now on the IWM. The SPY I think it was 418. We're at 416 right now.
Yeah.
The Qs are the only ones. I think I had a level of around 310 or 11, and it's trading at 313. So it's clearly kind of blowing through that initial level of resistance that I identified. So the Qs probably looking the best of all the indexes right now.
Yeah. Very strong, extremely strong.
So I think I think it's hard to say. I mean, we've had a really big day. We're coming into a Friday. And usually after a big day move, you get a little bit of back and forth chop. So right now, I'm really hesitant to put on any kind of trades just because we're at these levels of resistance. So and it's funny, I think again Andrew had it on his newsletter, Jamie Dimon, and there's been a few other of the financial gurus have come out and said, hold on to your hats, hurricane's coming. And
10 days ago, he said it's just a cloud.
Yeah.
And in 10 days, I don't know what he's seen that is saying a hurricane coming. It's very interesting, but Again, I don't make my investment decisions based on what Jamie Dimon's pumping or dumping.
No, and looking at the VIX last night, the VIX was, we had a bit of a down day yesterday, but the VIX was down as well. So that shows you that the people aren't really, reaching for protection in this market. The fear gauge, as they call it, was going the opposite direction of that you would expect if you are looking for a sell-off. So. I don't know, and I was just listening to CNBC on the way down here. They were interviewing some guy from a tech conference, and he said he'd been talking to a lot of companies like Microsoft and Datadog and those companies, and all of them are telling him they're not seeing any slowdown. There is some headwinds. Microsoft identified some headwinds with the strong dollar that we've experienced over the last couple months, so they're looking at taking a hit because of that, but it's not a demand hit, it's a foreign currency exchange hit. So
that was one of the reasons it turned out to be bullish for Microsoft as well. A lot of people thought it's a demand issue, but they cited mostly currency adjustments. So again, there's a lot of counterintuitive things happening. The $1 million question is this sell the rally, or we're going to see some continuation?
Well, I'd be looking for a bit of a breakout here from some of these levels that I just talked about, like the IWM, the SPY. Like I said, we're right there now. We had a big run up yesterday, or last week, I should say. We've had a bit of a pullback over the last Tuesday, Wednesday. Now we're getting a rally back up into resistance. So, you could say this is maybe you could say this is the start of an ABCD or the final leg of an ABCD pattern.
Yeah.
But it really needs to show some strength here and break through these levels. So
it'll be interesting.
Yeah.
Definitely.
So I'd be, I'm inclined to say that it looks like we're going to rally further, but we'll see what happens on Friday. It'll be quite interesting. I think it'll be a little choppy at the open, and then once again, as always, the market will kind of pick a direction and go one way or the other.
Yeah, no, I'm good. I had a good week. I made my weekly goal this week, so I'm not gonna trade tomorrow. However, as my whole portfolio overall, I'm still bearish. So you know me, I've been bearish since the beginning of the year. So still a little bearish. I think we got a decent amount of people here in the live. Thank you so much for joining. I see Del Trader. Hey man, how you doing? Follow you on Twitter. Great stuff you're sharing, and it's helping a lot of new traders as well. Carlos is in the chat. Good to see you. I got a little bit of an announcement to make. So this is kind of special since we got quite a few people, and I want to talk a little bit about this. I went into your author page on Amazon, and I noticed there's no longer one book. There's a brand new book.
Yeah.
Congratulations are in order. Profiting as Active Trader. Walk us through this book. What can we expect? What can we not expect? What's going on here?
So so thank you very much for having me on, and obviously talking about the new book that I just managed to put up on Amazon yesterday. So Profiting It as an Active Trader, it's a bit of a continuation from my previous book, How to Swing Trade. I wrote it. It's always tough to write a sequel to your first book because, part of the audience that I thought I might have would be first-time readers. So I didn't want to just jump into things. I felt I needed to go back and go over a few points that and topics that I discussed in my first book. So you are going to see some similarities there in my first book, but there were a lot of things that I didn't include in my first book, like some of the other momentum indicators that I use, some stuff on everything from trading penny stocks, because I have been known to trade penny stocks.
Yeah.
There's always been a lot of interest in our community about options.
Yes,
so I wrote a few chapters on options. Now this isn't an options book per se. You're not going to get a lot of discussion and presentation on topics like butterflies and just the basics, basically the basics, and also some strategies that I've used and you can use, obviously. Andrew and Ardi use as well, like like generating revenue from existing positions, that kind of stuff. So kind of some basics on options. So kind of a Kickstarter for people that don't have a lot of experience with options. So hopefully you'll learn a little bit about that as well. And some stuff on psychology. I know Mike and Andrew have a great book on psychology. I added that, a chapter on that as well. So there's a fair amount of new stuff in there, and I hope there's enough new stuff there for the readers of my first book to get more value out of the second book.
Amazing. Well, congrats. I wrote my first book. I know how hard it is to write a book. It looks very easy, deceivingly easy, but writing it and then the editing process and then working with someone for the layout, it's very, very challenging. So first thing I did when you told me last night, I ordered a bunch of them for the office. So we're gonna have them hopefully in the next meetup as well. Nice. If you guys want a copy, hop by the office, maybe we can give you one. So four main things in this new book you're gonna talk. Some new momentum trading strategies as well as indicators, how to trade penny stocks. So that's a good one because those can be really, really dangerous if you don't know what you're doing. Options, nothing complicated, but not always complicated means good. So, some of the basic stuff, call, puts, premium selling for income, and psychology. Pretty amazing. Congrats again.
Yeah, and there's some other new chapters in there. Well, I haven't talked about all of them. So
you told me about market cycles, right? You did something.
Yeah, I talked about looking at multi-time frame. I did a bit of a chapter on multi-time frame analysis. I did a chapter on rotation of capital. So, like I said, I tried to, the first sort of third of the book, I just basically went over kind of stuff I did in my first book for first-time readers. And then really tried to get some more into some more and new topics that people can use in their trading, whether it's once in a while or actively. So.
Definitely. Well, congratulations.
Thank you. Yeah, it took a year and a half. I was surprised. Wow. I was hoping for a year, but because that's how long the first one took. But this took a little longer. So, people that are going to buy the book, I look forward to your feedback, honest feedback. If there's stuff that I missed, something that wasn't well understood, definitely interested in hearing about it because, the book is there, and if there's stuff that needs to be added to or taken away, always open to doing a second edition.
Yeah, definitely. And one of the great things people ask me, why didn't you work with a publisher? One of the great things working with Amazon is it allows the author the flexibility to go ahead and change it and really use the feedback. So so the reviews actually really help us as independent authors to make the book better for the next person who's going to read it. Lots of great positive feedback coming in the chat, Brian. I don't know if you can see it. Drake Manes is saying looking forward to reading it. Vahid is saying great, Brian, I'll check it out. Really, really amazing. Let's get into the market. We have tons of stuff to talk about. Overall, on a day, we saw SPY really strong. Caught me by surprise, even with the jobless number. I thought today is going to be a chop fest. But Brian, do you look at anything to kind of give you an idea that the market is going to be trending today, or is it going to be a choppy day? This is one of the things I'm struggling as a trader to know. Is there something you look at?
When data gets released, I'm always looking at, if you follow my swing trade videos and posts, I am aware of, economic data that's coming out, but you're looking for the reaction because sometimes the reaction can be the opposite of what you expect. Yeah. So you try not to go into a trading day with, with a bias because, we looked at the way things opened. The market started to sell off. You really could have gotten into a bias that, this is going to be a sell-off day. Yeah. But, the market, if you stuck with that mentality, the market would have proved you wrong and delivered you a painful lesson. So
definitely. Yeah. You do not want that. You don't want to be a short on a day like this. Boom, just like that, you lose 2.5%, 3%. If you're on leverage, multiply that by 2 or 3. So that That would be really, really bad. So yesterday, if you can go to my screen, Fed's QT started. So far, so good. We thought the market will sell off, but not really. Almost twice as fast after the last financial crisis officially started. This is basically the schedule. So when we say QT, people think Fed's gonna aggressively sell their bonds. That's not necessarily true. For the first few months, they're just gonna let the stuff mature by itself. So we know these treasuries, they all have maturities. So here's the schedule. So on the 15th of June, we got 14 billion maturing. On 30th of June, we got 13 billion maturing. On 30th of June again, another 15 billion. So they're gonna let this stuff mature, and then probably in the next 3 months, they're gonna aggressively start and selling. Overall, you think this is kind of a headwind for the market, but so far, 2 days in a row, pretty positive.
Yeah, and there was some Fed comments too. It wasn't one of the Fed heads yesterday or the day before saying that September was going to be another big rise, like they weren't, whereas Powell kind of soft pedaled September as being, we'll wait and see.
Yeah.
So, I mean, it's funny. You try not to take individual pieces of information like that and come up with a bias on the market. And I heard a lot of people, or I heard a few people talking about this rolling off of the balance sheet and how this was going to be a big hit, and look what's happened to the day. So,
exactly. That's why you really need to really get into the details of it. Like, I had to do some research to actually see how much of this stuff are like naturally maturing and how much of them are actually being sold in the active market. That's another thing. One other thing though, in terms of historic perspective, we've never had back-to-back 50 basis point hikes. Like even Bank of Canada raised the rates by 50 basis point. And they said they're going to be more aggressive. So it's just, you're going to see a slowdown in the economy. So people are probably going to lose their jobs, especially on more sensitive stuff. We're already seeing it in private sector. And that was the bell for market close. So market just closed. Job numbers came out. The slowest gain we've had since the pandemic. So only 128,000 jobs were added. So very, 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 very low. Again, that kind of signals what Fed wants, right? The slowdown in the economy, especially in the multiple industries.
And bad news, I mean, it's one of those things where bad news could be good news, right? Yeah. I mean, if the Fed's seeing, a decline in, or even where jobs start to get lost, people look at that and go, oh, that means that in September they'll be more accommodative. Yeah. Maybe there won't be an interest rate hike. So again, sort of the old bad news is good news scenario possibly for the market here. So
exactly. No, that's very well said. Yeah, because now the market has priced in so much bad news that if Fed's gonna slow down, that actually will be a good news for the market. So you'll see market going up. And this is a conversation I have a lot of time. I'm sure you have it as well. When we talk with people who are not in finance and not traders, they're like, stock market is so out of touch with reality. Not really. We're going through a pain right now in 6 months when you lose your job, but the market is making all-time high, because we've already seen that, right? So market is always future looking. So that's one of the things. Before I go ahead, I want to say, since we got quite a lot of people here as well, one of the reasons we're doing this live show, of course, is to talk about market, but I want to bring on more guests. So today we have Brian. I want to bring on more of our traders. So if you've been trading with us for the past, let's say 6 months, 7 months, you've been consistent, you've been profitable, shoot me an email at ardi@bearbletraders.com and I can bring you on as a guest. I'm sure everybody will enjoy your journey. How did you become consistent? Who do you most relate to? Was it Thor? Was it Megan? Was it Brian? Was it myself, Andrew? And there's going to be a learning opportunity for everyone, because we want to do this 3 times a week. I can't just run it all by myself. I want to bring you guys on, and I want to hear about your experience as well. So definitely, shoot me an email or let me know in the chat, and we can be in touch.
That'll be great to have some of our members on and get their stories, get their perspectives as well. So
because Brian, the stories I heard one of the members, again, I don't want to say their name, sold their house, invested the money in the market, made a fortune, right? So like when you hear success stories like this, you want to be able to share them. So it's amazing.
So we're looking, what have we got for earnings? Just before we wrap things up here, I think we've got Lulu, don't we, after hours here?
Let's see.
I'm
Oh
kinda-
yeah, Lulu. We got Lulu today. Let me.
Yeah, I'm kind of looking. I'm looking at Lulu right now. It's jumping up a little bit here.
Let's go ahead. Let me see if I can bring on the charting here on the Lulu. Let's go to extended hours. Let's change that to 1 minute. Lulu was really strong all day.
Yeah, it was up $4.50, which isn't really that much on a. Oh, it was up. No, it was up 5% today. That's a fair amount. I'm looking at this from.
Yeah, definitely. Pretty strong.
That is very strong. And they seem to be, I don't know when they're reporting exactly. Sometimes they report 5 minutes after the close. And
Yeah, usually it takes a while. Let me see.
Yeah.
I'm going to go to our news page and see if I can find any breaking news coming out of that as well.
with Chewy up almost 24% at the end of the day here.
Wow.
Microsoft managed to pull out a little bit of a gain after that initial reaction, market reaction to the sell-off. And even Apple's been sort of an underperformer, and as far as traders have been going after these really beaten up names like Datadog and all the other ones that have really taken a hit, when they're kind of leaving some of the more steady names alone.
Yeah, I mean, because some of these names, once the stock's down 80%, you get a 25% bounce from it. That's up 25%. Yeah. You can't get 25% out of Apple.
No.
So nothing in our news page has come from Lulu. It seems like the last news update was about 22 minutes ago.
Okay, well, it could be like a half an hour after the close, but they are gaining in the after hours here. So we'll see what happens. I don't recall what else was we're reporting today.
Well,
after the close. You want to take a quick look?
Yeah, let's check. I know Lulu was a heavy hitter. We got some oil name, PTR, POSCO, so PetroChina. CrowdStrike. Crowd's going to be. Oh man, I should have traded option on Crowd. I didn't know they had earnings. I would have done a straddle on those guys. Asana too. This is another tech company that has been really struggling.
Yeah.
ASAN. Still pretty good names, but we are almost at the end of this earnings season. So next week we got some, and I think that's about it. We got DocuSign on Thursday.
Yeah, there's always a few dribbling through between the earnings season, but we're kind of through the bulk of it now. I see TLT kind of popped up here now, which means yields are dropping a bit end of the day. So that's interesting, but the dollar was down quite a bit today.
Brian, where do you see the 10-year going? Some people are saying 3.5–4% by year end. Do you think that's possible?
It really seems kind of stuck just around this, just around or under this 3% level.
Yeah.
I don't think people really have a good feel for where it's going to go. And so therefore I think it's kind of just going to churn sideways. So 3.12 was the high that we put in a week or two ago.
Yeah.
So if it is it needs to break through that sort of 3.1 area.
And it was right at that trend line of the long-term trade line. It broke it for a little bit, but then it couldn't really hold it. Yeah.
So it did pull back. I mean, again, it seems to be just churning now, just under 3%. So I mean, maybe that's where we stay until, and if we continue to get sort of weakening economic numbers, I suspect that it may have trouble going higher.
Yeah, that's true.
It's really going to depend on what economic data we get as the months go on here.
Yeah, because I think 10-year now is already priced in a few rate hikes already in it, with it being almost at 3%. Ton of stuff. Let me just see another really cool thing I wanted to share before we log off here. A couple of interesting data I came across, and I talked about them in a chat room. I want to kind of share. This is about inflation. Brian, I think you'll find this pretty interesting. Let me bring this here. This was once the pandemic hit. This is basically the linear trend, and this is goods consumption. Look at when everybody was in lockdown, look what happened to the goods, right? So a lot of the supply chain disruption that we're seeing is because nobody was able to go in a restaurant or anywhere. Right. So goods really overshot
Yeah.
And if you look at the linear trend, it should have been somewhere here, but now it's here. Other side of the story on this end is the services. So everything was locked down, so services couldn't really recover, but now is slowly recovering. And going back to that trend line, when I look at this as a trader, it brings me into one thing: go long service business for the rest of the year, go short goods business. What do you think about this?
Yeah, I mean,
you
know, what you're illustrating there is essentially what a lot of people call reversion to the mean, which means that things when things happen, crap happens, you know, you get these outsized reactions, but then as time goes on, it always comes back to the average. It always comes back to the mean, and I think what you're seeing with those two charts is basically that exactly phenomenon, is the reversion to the mean. In other words, coming back to the trend line. So I think that's a very valid argument to make for doing services, going after services, and maybe.
Yeah, because we saw that even on like Target, Walmart, they really got hammered because they said, oh, consumer spending has shifted. So a lot of people are now spending on services rather than buying goods. That's why our inventory is building up so much and their stock completely crushed. One last thing I wanted to share and kind of get your opinion is this idea of I got it this morning from FactSet. So this is how many times CEOs are talking about different issues. As you can see, the green line is the inflation. So the number of times CEOs are talking about inflation, it's going higher and higher. But it seems like the supply chain has peaked in Q2 of 2021. So people are still talking about supply chain, which is the light blue line, but not as much. So again, counting on the idea of supply chain is kind of easing down a little bit. Things are getting better, but there's still upward price pressure. So I find that stat amusing as well. So I thought I'll share it with everyone.
Yeah, I mean, part of that could be demand destruction. I mean, we've seen such an incredible increase in price. So you know, what's the cure for too high demand is high prices, and that certainly knocks some of the demand out of the market. So maybe supply chains are constraints are eased just because there's been all this pent up demand. I think a lot of people went out and spent a lot of money, and now they're seeing inflation, and now they're thinking, okay, maybe better sit back a little bit and see what happens. So it could be a combination of those things as well.
Yeah, definitely. I mean, that's your kind of your classic supply and demand curve. I drew it one time in the chat room and people loved it, and I'm like, I'm so amazed that people in the day trading chat room love supply and demand. We had a massive supply shock, so your supply curve went here. That immediately collapsed the demand and prices went up. So if this is your prices really increase from this point to this point. So quite interesting stuff. Once you learn them and you apply them to trading, you see that you can actually really make amazing decisions. That's about it for today. We covered a lot of stuff. We talked about the job numbers. We looked at the market. Brian think that if we can hold, this could be kind of a breakout. So yet to be seen. Really interesting. We talked about Microsoft earnings and of course Brian's new book. If you haven't checked it out, make sure to check it out. Just type in Amazon Brian Pezim, How to Profit as an Active Trader. Brian, any last word, any final words?
No, I think we'll see what tomorrow brings. Again, this is, the market seems to have found a bit of a bottom here, and the VIX is indicating that there's not a lot of fear in the market right now. So, it's possibly at least a bit of a bottom has been put in for now. And we'll see how much, the only thing I'll say about this buying is it has been on relatively low volume. You haven't seen a lot of, which might indicate that the institutions aren't really jumping in on this quite yet. So that could be a good thing and a bad thing. If they do decide to jump in, that'll just add more fuel to the fire.
Yeah.
But again, sort of a low volume rally, but a rally just the same.
Yeah, exactly. Hopefully our traders was able to get the most out of this. You know, looking at VIX is at 25, 24.50, which is, you know, historically VIX is at about 18, so 24 is about one standard deviation away. But it's pretty common for bear markets to have elevated VIX. So, you know, 24 is pretty common in the bear market. It was at 28 it started the week, and it's been coming down slowly. So. Hopefully that means things are getting better, or it could mean that people are already hedged, they've bought enough puts, so they're not really worried about that. So you could see it as that way as well. You got to look at the open interest. With that, that is our show. Again, this tool that I'm looking at, the stuff, is our trading terminal. We're relaunching it in a couple of months. Really exciting feature is being added to it. Scanners is being added to it. We got a whole education tab that we're working on. We're working really, really hard to make this an amazing tool for traders and swing traders. Hopefully everyone get a lot of value. Indigenous Pathway, really appreciate BBT closing bell. Have a green Friday. Thank you so much. Sal T is congratulating you, Brian, for the book.
Awesome.
He said he's really good. He or she said really grateful. This was the first book that they got him started with trading.
Great.
That's amazing.
Awesome.
Great to hear. So with that, that's another closing bell. Thanks everyone for tuning in. Really appreciate it. We'll see you next week. We don't have a show tomorrow. We'll see you next week on Tuesday. If you are a consistent trader and BBT has helped you in any way, shoot me an email and let me know your story. I would love to bring you on the show as a guest. So let's do that as well. And let me just type in my email or maybe Santiago, you can put my email in the chat as well so people can shoot me an email. All right. Thanks a lot. And
Thanks,
we'll
everybody.
See you next week.
See you next week.